Hello everyone, thanks for joining us this Saturday morning and welcome to this educational presentation of a strategy that I've been actually trading for over 42 years. Now I was first introduced to this method on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years and 9 of those years I was a specialist, so that's where we get the name specialist trading. And when I was first introduced to it, we used it for trading just for intraday really examples because it was designed to trade some quick momentum moves. But let me share with you what that strategy actually is. I've been talking about it for years now, and it's strategy number 4. Now, some of the highlights, once again, is for virtually all traders. It doesn't matter if you're just starting trading or if you've been trading for years. Everyone gets the same basic format. It's for, once again, traders looking to catch momentum, and it does that very well. It's a very moderate intensity level right in the middle of number 2. It only uses one indicator. That's how simple it is. And it can be applied to virtually any time frame, any direction, and any market, as you'll see in just a few minutes. Now, if you're a member of the strategy number 4 course, you receive automatic buy and sell indications, but these are strictly for educational purposes, a way in which to check your work, because we want everyone to get to the point where you can just look at a chart and quickly identify where a setup is. And then lastly, it's extremely consistent, meaning that we are aware that we'll have losses from time to time, but consistency means having a method that's able to recoup those losses. And that's what strategy 4 does very consistently. Now, let's look at this chart here. This just happened just this last week in ROG, or a couple of weeks ago. Here's the way most traders trade. I know when I first started trading, this is the way I looked at the markets, and this is the way I made my trading decisions. And ultimately, I think why upwards of 80 to 85% of all traders fail. You look at a chart like this and you'll say to yourself, well, there's really nothing happening. I mean, there's no direction. We're going sideways. There's no way I can give any kind of clear analysis. The chat room I go to doesn't like this stock. It thinks the earnings are going to be terrible. And there's really no direction, so I'm not going to do anything because it's not telling me anything, okay? Well, this was coming into the 30th of April. Now, prior to that, analysts estimated that Rogers Corp, ROG, the chart we're looking at, was going to report a decline in earnings, okay? So it was going to be a decline in earnings for the quarter ending March 2019. So that was another thing to apply, to use onto this chart or this stock, thinking that, well, I'm not going to trade this because the analysts have given it a negative estimate, and there's no reason actually to purchase this, even to do anything in a stock that's going to go down. I'd more likely look at a place to bottom fish or to buy at lower prices, okay? Well, with not taking any of this into account, strategy number 4 actually generated a buy signal right here on the 30th of April. And guess what? May 1st, Rogers Corp reports the first quarter in 2019 results were record quality revenue. So great news, right? A 7.6% increase compared to 2018 fourth quarter net results or sales. So obviously, the stock went up. Now, someone would say, well, you must have done your analysis and you must have projected that the actual earnings were going to be good, right? No, because it is not required to look at any earnings or any fundamental news or anything even outside of one thing, and that's the chart in front of you. Everything we teach at Specialist Trading is based on what the market tells you, not on what some analyst believes or what some institutions believe, or not even on what someone in a webinar believes. It's just based off of what the market is telling you. Things are a lot simpler and you'll be a lot more consistent if you learn how to listen to the market. Now, Pro Trader Strategies and myself have devised and put together, actually you see here 40 points in one day, we've actually put together a platform that teaches you how to trade and how to listen to the market and how to trade with strategy number 4. This is our new PTS Primo charting platform. All the displays and all the examples you'll see today have been generated using our platform. So as you can see from the one example I share with you, this is going to be a great educational presentation. I'm going to be talking about one of my favorite strategies, something I use on a daily basis. This is strategy number 4. So welcome once again. My name is Primo. I've been trading for roughly 42 years now. I was introduced to strategy number 4 on the floor of the exchange. And trust me, when I first started out, even though I had advanced information, I had much quicker charts, or I should say computers and access to entering and exiting orders, and also information concerning institutions than anyone else did, I still struggled with my trading for a year or so. In fact, I couldn't make any money. I was just basically trading water. I was doing the same things that most traders are taught, looking at earnings estimates, looking at volume, support and resistance, listening to the institutions, subscribing to a lot of newsletters. We didn't have blogs then or chat rooms, but we had newsletters. And I was waiting with bated breath on every economic report. And guess what? It didn't work. So I was lucky enough to have mentors that really said, listen, Steve, there's no reason you should focus on that. Why don't you learn to focus on the one thing that matters? That's the chart in front of you, the source of what you're trading. Once I started to learn how to do that, my trading came into place, and it has sustained me now for 4 decades. So this is the reason why I teamed up with Pro Trader Strategies to teach traders around the world in over 115 countries and in every state in the United States, all of my techniques and methods that were taught to me so that hopefully be able to sustain you going forward. Now today I'm going to share with you, once again, a couple of the rules to strategy number 4. But before we begin, as always, we're first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of examples with strategy number 4. But remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view the required disclaimer, as always, I want to also, for a lot of you that haven't done so already, feel free to follow us on Twitter. I post 2 to 4 different examples every day of signals our strategies have generated to little bits of financial wisdom. So lots of great free educational information. Follow us on Twitter. Now, once again, I have been basically trading for 4 decades, but when I first started out, I was no different from a lot of you. And I know you've spent a lot of money and a lot of time and energy trying to learn to find the Holy Grail. And I did the same thing once again 40 years ago, and I really have found the Holy Grail. And what it is education. It's educating yourself. Because once you educate yourself, you realize there's no reason to rely on anyone or anything else. You can make your own trading decisions. You can be in charge of your own trading destiny. So that's what we're trying to do. We're trying to push you in the right direction. Because face it, 80 to 85% of all traders will ultimately fail. And when we say fail, we mean you'll give away all of your hard-earned savings for trading. We don't want you to fall into that group. The reason that happens is because you've taken yourself out of the game. You're relying on someone, some earnings estimate, some trader in a chat room, or some guy on TV to tell you how to trade. When all you need is the proper education, someone to mentor you and help you along the way so that ultimately you can be totally on your own and you can be in charge of your destiny. That's what our goal is. Not to trade for you, but to teach you how to trade with a specialist edge. The same edge that was taught to me some 42 years ago, and what I truly believe has sustained me going forward for this amount of time. Okay? Now, I want you to ask as many questions as possible today, but we're going to be here for a limited amount of time. I don't want to take your entire Saturday morning, so please, if you're new to my presentations, I like to take questions, but at the very end, okay? So that way we won't stop for every slide. And many times, if you wait, your question will be answered on the next slide or so. So please, if you have a question, just wait till the very end. I promise I'll get to it. The only, the only question I will answer is, this is being recorded. Yes, it is. Many of you either have to leave early, or if you're having technical issues, a lot of times you can't see the screen properly or hear properly. Many times that's your own internet connection. If you're having trouble, just log off and log back on again, okay? I trust everyone is seeing and hearing everything clearly right now. Once again, if you're having difficulty, though, we will send each and every one of you a link to this recording, okay? So just to make sure, before we begin, because I see now that some people were having difficulty hearing, if you could just go to your question and answer box and type in a yes or a no if you're seeing and hearing everything clearly. That way I'll know to proceed. I don't want to start going over these 2 rules and then having to start all over again, okay? It seems like everyone is hearing and seeing everything okay. All right, sounds great then. I guess there's no problems. Thanks. Remember, if you are having difficulty, if you log off and log back on again, it'll be fine. Many times it's just your own internet connection. Great. Thank you so much for responding. All right, so with that stated, let's begin today's presentation. We're going to start out with giving you 2 of the rules to strategy number 4. Now, this is an extremely simple strategy. I believe it only has 4 core rules. I'm going to give away 2 of them today. I can't give them all away. It wouldn't be fair, because I know I've seen some faces in here who already have strategy 4. I know they wouldn't be happy with me in the presentation if I gave away the whole thing. So I'll give away just a couple of them. And if you're interested, or if you're concerned, or you're thinking about becoming a student of mine and a member of the Strategy Number 4 course, try out these 2 rules on your current trading method. I'm sure you're going to see that they will elevate your consistency tremendously. So if you really want to take it to the next level, try them out and then become a student of the Strategy Number 4 course, okay? All right, so rule number 1. As I've stated before, buy signals can only be entered above the 50-period simple moving average, excuse me. As we see here in this weekly chart of Apple, here's an older chart of Apple. Once again, someone looking at this would say, no real clear direction here, Steve. Can't really tell what's going on. But if we apply the 50, there actually is a clear direction, because if price is above the 50, the market is in an overall uptrend. So if the market is going in an overall uptrend, who are we to try and short it? Okay? We want to go with the overall trend. So we're only looking for setups that are above the 50 to go long. If we get a setup or any strategy that is above the 50 to sell, the odds are against us that that'll be working out, or it will be a highly profitable trade. Okay? So the overall trend is up if the price bar is above the 50. That means if you get a signal, you must be entering above the 50-period moving average. Conversely, buy signal bars must close in the top 25% of their range. So in other words, it's just not enough to see a bars or a number of bars be above the 50. We want to see our setup bar, our signal bar. That's where all the requirements come into play, closing in the top quarter of its range. So in other words, if this is your bar from top to bottom, and we don't mean range from open to close, that's not what range is. Range is extreme high of the wick to extreme low. That's real range. So if you divide by 4 separate but equal parts, and if you close in that top quarter, that is the bar that holds the most interest, because it's telling you that the market wants to go higher, okay? Now conversely, let's say someone says, well, Steve, what about if you want to sell? Okay, you just apply the rules in reverse. In other words, you must be below the 50, and you want to look for a bar that looks like this, okay? If you measure the range from extreme top to extreme bottom, divide by 4, well, if you close in that bottom 25%, what's the market telling you? It's saying it wants to go lower. So these are 2 of the rules. These are 2 requirements in a setup for a strategy number 4, buy or sell signal. All right, once again, I cannot give you the other 2 remaining rules, but you have the core of what we're talking about right here. So as we look at this chart, okay, we're above the 50, rule number 1, so that means we're only going to be a buyer. I don't care if anyone in a chat room or some guy on TV says some earnings are going to be terrible, you got to sell this. Forget about it. The odds are in your favor that this wants to go higher. Now we look for a bar that closes in the top quarter of its range. So if we look here, we see, no, we closed in the middle to lower, we close a lower, lower, right in the middle. But this one closed at the top, okay? Top 25%. Now, according to the remaining rules of the strategy, it met all the requirements, and so this is a valid strategy number 4, buy signal, okay? This is what we want you to do. This is part of the process. We want you to be able to identify this on your own. This is education. You see how this is different from simply going to a chat room and listening to what some guy likes to buy or likes to sell? We're actually sharing with you and teaching you how to listen to the market, because these are signs, these are edges coming from the market. It's telling you what it wants to do. Okay? So, stock went up 20 points in the next month. Not a bad signal, right? We didn't have to look at any earnings. We didn't have to look at any supply and demand. We didn't have to look at any volume. Take a $10,000 course on the institutions. I mean, that's silly. I did all that 40 years ago, so I've done all the hard work for you. It doesn't work in terms of consistency. Sure, you'll get a great setup every once in a while that will work using those methods. But remember, we're looking for consistency. We're not looking for just one good trade and then giving it all back the next 3 or 4 trades. All right, that's the way most traders trade, myself included when I first started. What you want is 2 steps forward, 1 step back. All right, so let's look at some daily strategy number 4 signals, and let's look at the process that you would be using on our platform. Remember, we designed this platform not just to have another platform for you to look at charts and to say, hey, look at the way we show our charts. No, it's an educational tool. It's a way to learn how to listen to the market, and it teaches you how to trade strategy number 4 on your own. So that, remember, our goal is to have you let go of all this useless information and learn how to listen to the market. Here's the tool of how to do that we've constructed for you. Now, here's the process you would go through, all right? Let's say you punched up this chart beginning of April, just about 3-4 weeks ago, LDOS. Once again, someone looking at this who has not taken my courses would say, Steve, this is a flat sideways chart. And I actually took this course where the institutions are selling here. So this is major resistance. So I don't want to buy this. I mean, look, we can't get through. I'll wait for a breakout, and it has to really confirm the breakout, not just 1 or 2 days up and then straight down. I have to wait till it goes up, substantially before I even consider. I would more likely want to sell this to be in sync with the institutions because they're sellers right here. All right. Once again, every justification I made for this was based on what someone or something else was doing or telling me. It wasn't based on the market. And I'm not trying to be silly about this. This is the way I used to trade too. I used to make these same decisions based off those inconsistent techniques. All right. Why don't we learn how to listen to the market? So how do we do that with our platform? Well, the first thing you want to do with any stock, with any future, with any currency pair, and it doesn't matter what time frame, is you want to go in the upper green strategy tab here. Here's with all our strategies and methods. Click on the one on the far left, which is the buy-sell line. All right? That's simply the 50-period moving average. But we call it the buy-sell line because it's going to tell you whether you should be buying or selling. Now, we have different features on our platforms, ways in which to apply it, 4 total different features. Let's just look at the most common, which is the 50-period moving average line. Okay? So now that we've applied the 50, where is price in relation to that? Price is above. So is the overall trend down? Should we be listening to the estimates or the institutions? Absolutely not. The overall trend is up. So we want to look for buying opportunities. Now, does that mean just because it's above the 50 that we're going to buy? No, it means that we have to look for some type of structure in the form of a strategy. But that structure is only going to have a buyer's bias. We don't care about anything in terms of selling. Okay? All right, so we look for bars that close in the top 25%. There's a lot of them right here, but they also have to meet the other requirements of the strategy. And this one does. So you can see we're above the 50, we're in the top 25%, and the other 2 requirements, which I'm sorry I cannot share with you right now, were already met. So this is a valid buy signal. In order to check that, you would click strategy number 4 on our strategy tab, just to check to make sure you're in line. Click on the signal arrows right here, because that's going to share with you what a valid signal is. And guess what? You're right. You're learning how to properly identify. Ultimately, you won't even need these arrows, but that's how you learn the process. So now you can say, I guess I can take this if I want to. This is not a system. Now in the course, we give you 6 or 7 different ways to enter, 6 or 7 ways to exit, 6 or 7 ways to place your stop. Once again, those are all your decisions. You decide how you want to enter, how you want to exit, how you want to place your stop. Some of our traders have very low risk tolerance, so they like a real tight stop, risking as little as possible. We provide you with stops like that. Some traders like to stay in the trade as long as possible to capture as much bang for their buck. We have exits that will do that. Is one better than the other? Absolutely not. The only decision is what makes you feel comfortable. Now, LDOS in the middle of April, just about 2 or 3 weeks ago, went up 10 points. So you could have used any way in which to trade it, but that's what we encourage. We're an educational company. We want you to decide how you're going to trade it. We're just sharing with you high probability setups and teaching you how to identify them. Here's another example in CTL. I shared with you this last week, I believe. We looked at this, and most people would say, Steve, there's divergence. This low is not being confirmed. We have to buy this right here. This is a great buy setup, and that chat room I go to loves this stock. It says the earnings are going to be good, and you really have to buy it, okay? We don't care what anybody or anything is saying. What is the market saying? Go to the buy-sell line, click it on. In the drop-down menu, just simply click on 50-period moving average. The market is telling us the overall trend is down. Do we want to buy in an overall downward market? No, we only want to sell. Now, this is not saying that you will not see some really nice bottoms that you could have taken advantage of. But remember, it's not about a gambler's mentality. We're trying to, bet on a horse 100 to 1. We don't care about that. We're trying to be consistent. We're trying to hit singles. And the only way you can do that is being in sync with the overall trend. So don't worry about picking tops and bottoms. Sure, you'll miss some really great ones every once in a while. But remember, I worked on the floor with over 200 people. And there were some guys that made tremendous amounts of money, hundreds of thousands, even millions, picking tops and bottoms. And not one of them has kept that money. They've all given it back. They're not trading anymore because that type of trading doesn't last. It won't sustain you. As your mentor, I'm trying to teach you things that will sustain you. So you can be trading 40, 50 years if you'd like. So in sync with the overall trend will sustain you, okay? So we're only going to be a seller. Now we want to look for bars that close in the bottom 25% and that meet the remaining rules of strategy number 4 setup. Well, guess what? We have 2 of them. We have one right here, went down a little bit, but then came all the way back. But guess what? We have another one here. So let's check our work. Let's see if we can check to make sure and confirm we properly identified 2 valid strategy number 4 setups. All you have to do is go to the green strategy tab, click on strategy 4, signal arrows, and you were right. You're on your way to learning how to listen to the market. Now you have a choice. You can take these trades. You also have a choice as to where you want to enter, where you want to exit, where you want to place your stop. It's entirely up to you. You also have a choice whether or not to take the trade. You don't have to take it. You have a choice as to how you want to take the trade. You can buy puts. You can short the stock. It's entirely up to you. Remember, we're not a systematic company. We're not telling you how to trade. We are teaching you how to trade. Either way, you had a nice trade there. Went down 8 points in your favor. And even though it lasted for a good 3 or 4 months, do you see how when you're on the right side of the market, how you will have a higher level of consistency as opposed to trying to buck the overall trend? All right, so let's look at another example, APC. We've applied the 50-period moving average. Now we're kind of oscillating below, but for the last 5 or 6 bars, we have closed above, okay? So that's all we need. I mean, if we really wanted to trade aggressively, we would just need 1 bar to close above and to meet all the rules. But here we have about 5 or 6 bars. We close in the top 25% right here. So this looks like a valid strategy number 4 signal. We check our work, click on strategy number 4, click on signal arrows, and we are correct. So we can decide whether we want to take this, whether we want to buy calls or some type of spread strategy. Either way, LDOS went up 28 points. Obviously, some great news here caused it to gap open here and gap higher again. We had no idea what the news was. I still have no idea. It doesn't matter. I mean, I always say this in my courses to my students, this analogy, where if you're walking down the street and it starts to pour and rain and you don't have an umbrella, are you going to really be concerned with why it's raining or what's the cause behind that or what's the reason why it's raining at that particular moment? No, you're going to be more concerned about reacting and keeping dry and getting to shelter or getting out of the way. Perhaps there's lightning. It's the same way with trading. We don't care what the reason is. There's always going to be some reason that came up. But how did we know a good week before to buy it? Those reasons hadn't come out yet. So how did we know? We have learned how to listen to the market because the market usually tells you everything you know. It's the source of what you're trading. So why are you listening to things outside of that source? Just listen to the chart in front of you. It tells you just about everything you need to know. And it's a lot simpler, too. I used to rack my brain out trying to figure out earnings estimates. And then I thought I'd have it all down. If it got to a certain number, that was very positive. A certain lower number was very negative. So it would come out and it would meet my expectations. I said, this has got to be great news. I'd buy the stock and it would go straight down. Does that happen to anybody before? And it works the opposite. It would be terrible news, terrible earnings, or terrible announcement. I would get out of my position or sell. It goes straight up. See, you need things that are more cut and dry, more consistent. And that's when you just listen to the market. It's very black and white. If we're above the 50, you're a buyer. If it's below the 50, you have a seller's bias. You can't get any more structured than that. All right, how about WBA? All right, here's a little bit more aggressive trade. For all intents and purposes, we're below the 50. We had 2 closes above. But what do we have here? We have a bar that closed below the 50 again, and it closed in the bottom 25%. You think that's a valid sell signal because that's all it really takes, according to the other 2 rules. You check your work on this particular bar here. Click on the tab. Click on signal arrows. Guess what? You're right. You're on your way to learning how to spot valid setups. So let's say you did go short. Let's say you bought some puts, 19 points coming into the end of April last month, okay? Now this is why we always say it's important to be in sync with the overall trend. Let's say at this point right here, you said to yourself, oh, okay, Steve, I understand what you're saying, but boy, the indicators have never been more oversold. I have never seen any stock more oversold than this. Everyone in the chat room is buying this. They think it's going to bounce up. It's a bottom fishing thing. I know it goes against your rules to buy below the 50, but I want to take a quick chance here that it's going to come back up here, and then I'll get out. Then I'll short. Okay. Well, let's say you had bought somewhere around here. You would have had a couple of weeks and just a very meager gain here before this happened. And if you weren't quick enough, look what happens. Okay. You give it all back. Much better to be in sync with the market as opposed to trying to outsmart it. If you were in sync with the market, look at the gains you could have made here. And if you missed that, the market gave you another chance, and another chance, and still another chance to get in, to go short. So this is the beauty of being in sync with the overall trend. All right, we look at ROG, what we talked about earlier. How did we take advantage of that 40 points in one day? The same exact process. We apply the 50-period moving average, even though it looks as if there's no direction. And once again, the estimates come out and tell us there's no direction right now, but you better be careful. The estimates are clearly going to be bad. Well, we don't listen to those things. We listen to the market by applying the buy-sell line. Click on 50-period moving average. And what is the market telling us? It's telling us that the overall trend is up, and that most likely it wants to go higher. How high? We don't know. How low? If it were below the 50, no one knows. It's only telling us it wants to go higher. That's it. So we're going to be in sync with that until it tells us it changed its mind. Now we look for a bar in the top 25%. Well, so far we think this is the one that meets the rules. We check our work, and we are correct. On the 30th, just a week or two ago, a buy signal was generated. And look what happened. What happened to the negative estimate? Okay, you could have taken advantage of 40 points. You could have taken advantage of any of our different ways to enter, any of our different ways to exit, any of our different ways to place your stop. There's not one correct way. And we give all of our members a standard format, a very basic format. And we want you to learn based on that format. But once you do, and you feel that you really have the process under your belt, you're free to apply any way in which to enter, any way in which to exit or stop, as long as you fully understand the rules. Now let's look at some other markets, because I don't want you to get the idea that, okay, Steve, well, this works great on stocks. I don't trade stocks. I trade other markets. All right, so do I. Okay, I really have focused now more on intraday trading because I don't have a lot of time because of my scheduling. And because of giving webinars like this. I give a webinar almost every day, sometimes twice a day. So I don't have time to really look for a lot of stock trading, but I have every now and then I have free moments to intraday trade. So let's look at some other examples here. Let's look at the British pound. 4-hour chart of the British pound just last week, 2nd of May. Okay. Once again, this looks like those stocks. Basically, no direction. There's no clear idea. If we click on the buy-sell line, what's the market going to tell us? Well, same exact thing, 50-period moving average, we're above. So the market is telling us it wants to go higher. I don't care what the economic reports are. I don't care how overbought or oversold or how much in a whipsaw range you're in. The overall trend is up. We're looking for structure to go long. But please remember, most students make this mistake. They say, well, Steve, I lost money because it was above the 50, so I bought at the market and it didn't go up right away and I kind of stopped myself out. Remember, this is not a strategy. The buy-sell line is just that. It's telling you whether you should have a buyer's bias or a seller's bias. Now you have to add some structure. This is why we're talking about strategy number 4. That's the structure. In other words, just because you see a river going from point A to point V, you're not going to just jump in and say, well, it'll take me to where I want to go. Well, sure, you might go down there, but if you just jump in, you might get hit against the rocks at some point. At some point, it might turn in slow to a pond. You have to have a little structure. So in the form of a boat, in the form of a canoe, in the form of a raft, that's what's going to take you down the path. That's what's going to take you down the trend of the river. Same thing with trading. Just because we know what the market overall trend is, we need some structure in the form of a strategy. That's our boat. That's our canoe, our raft, okay? So the strategy is based on a bar that closes in the top 25% of its range. That's rule number 2. And we have 2 bars, one right here and another right here. Let's check to see if they're valid strategy number 4 buy signals. Click on strategy 4, click on signal arrows, and the same process works. Now let's say you were a very low risk tolerance, so most likely you would have been stopped out on this trade because it went down in the next 2 days fairly deep below your very tight stop. Does this mean the strategy doesn't work? Absolutely not. It just means that the market needs a little more time sometimes. This is why we say our methods are extremely consistent. Consistency means we are aware that we will have losses from time to time, but you want a method that's able to recoup those losses. That's what consistency means. So the very next setup, you got to get back up on the horse because that's the one that worked in your favor. You had 150 pips potentially to capture. Depending on which exit you wanted to use, you could have recouped your loss and gotten out. You could have recouped your loss and made a little bit more money. It's entirely up to you. How about a 10-minute chart of the E-minis? Okay, this is going back to May 1st, May 2nd again. We are below the 50-period moving average. The same process applies. Doesn't matter if we're looking at stocks, British pound, or a 10-minute chart of the E-minis. Nothing changes because we change market or time frames. We're below the 50 period. We have a bar closing in the bottom 25% of its range. It's a valid sell signal. So you can decide to sell the E-mini on a 10-minute time frame, decide your exit point, decide your stop placement. And this would have been a really nice trade because you ultimately could have captured 40 points. Now, if you missed that, there were a lot more examples here. Let's say in Bitcoin, okay? Now, I know a lot of people were saying, well, Steve, Bitcoin is dead. We had that run-up last year, but it hasn't done anything. I wouldn't touch that with a 10-foot pole. Well, actually, it's not dead. A couple of months ago, if you looked at our tweets, we were tweeting a lot that there's a lot of buyer's bias going on in Bitcoin. If you look back in February and March, we were warning a lot of students that they may want to be interested in checking out Bitcoin again. All right, why? Well, because if you punch up the buy-sell line, it had been consistently above the 50-period moving average for a long time, and it seemed to be just coiling, waiting for something to happen. At the same time, there were a number of buy setups being generated. Strategy number 4. If you check your work, the same process applies, and you see you were right. 2 really valid buy signals were generated in March. Now, someone would say, Steve, on Bitcoin, there's nothing going on. Why would I touch that? I'm just going to get whipsawed. Well, maybe, maybe not. I mean, no one knows. We're not guaranteeing you that everything's going to work. Remember, we said we are aware we will have losses. But it's up to you to study this and to be a part of the process so you could decide on your own. Now, had you decided to trade Bitcoin a month or so ago, check out the really nice run we had. Now, someone could say, boy, you must have done a lot of study, a lot of economic information, studying about Bitcoin. You may have done a lot of research on, a lot of the firms that are going to be backing it up. No, we don't do research that way. All we research is what the market is telling us. Now, this chart was taken at the end of April, towards the end of April. I believe Bitcoin is even higher now. And if you miss these setups down here, the beauty of strategy number 4 is that if the trend is strong enough, it will generate even more setups, the way it did right here in the middle of April. So you always have a chance to get back in if you missed the first couple of examples. Okay, so let's recap, all right? Let's recap what we went over today. We talked about step 1 in this really, really unique and simple but powerful strategy. We talked about the buy-sell line, which is simply a way to determine what bias you should have. Think of it. How many times have you lost money because you were buying when you should have been selling, and vice versa? Most of your losses happen because of that simple rule, because of the times you're buying below the 50 and selling above. Go back and look at your last 10 or 20 trades. I can almost guarantee you lost money because you were just doing that. You were trying to pick a bottom by buying below the 50 and trying to pick a top. Sure, maybe you had a couple of good trades, but how are you doing overall? Okay, most likely not very well because you're out of sync with the trend. You're swimming upstream. It's a lot easier. You're going to be a lot more consistent if the first thing you do, regardless if it's this strategy, one of mine, one of yours, someone else's, always apply the 50-period moving average, the buy-sell line, and ask yourself, where is price in relation to that? If price is above, you will only take buy setups, whatever method you're using. If price is below, you only take sell setups. You'll really increase your odds for consistency. Now, another way to do that is to add step number 2. That's strategy number 4. That's what we talked about. We talked about looking for a bar that closes in the top or bottom 25%, which applies these rules and everything we talked about today, but a couple of more rules. You saw the consistency in any market and any time frame. Now, consistency, once again, is an awareness of losses, but we're trying to recoup those losses very quickly. And you saw a couple of great examples in that today. Now, the best thing about this is that we've constructed an entire course, an entire platform for you to learn how to properly identify on your own. Remember, the very beginning of this presentation, I said the only way to become consistent is not to listen to outside sources. It's to make your own decisions. It's to learn how to listen to the market. The reason why most traders fail is because they're doing the opposite, myself included. I was listening to every so-called guru out there. I was spending tens of thousands of dollars on courses and systems. And this was 40 years ago. So at that time, tens of thousands was probably worth about $50,000 or $100,000 worth of money I was spending. Okay, we didn't have blogs or chat rooms, but I was subscribing to newsletters and nothing was working. The only thing that worked ultimately was learning how to listen to the market. Now, I was lucky enough to have some mentors on the floor who took the time to teach me these things on a one-by-one basis. I know I can't do that now. We have students all over the world and in every state in the United States. I can't virtually go to everyone's house, but what we can do is put together a platform for you to learn and to understand these processes. And that's the PTS Primo charting platform. I'm so proud of this. I designed this and formatted it with Pro Trader strategies to make trading simple. Every example you saw today was on the platform, and we just shared with you the tip of the iceberg. There's so much more to learn using our platform. All right, so before you ask me questions, I'd like to ask you, do you think these edges could have helped your trading this past year? And I really think if you go back and just use these 2 rules I taught you today, just apply them to your current trading method, you'll see how much they can increase your odds for consistency. Once you see that, you're going to want to take advantage of this special offer we have for you today, okay? We're going to offer you our strategy number 4. This is our strategy number 4 special, okay? Instant course access, detailed instructions. We're going to teach you how to learn all these different entries, exits, and stop placements. You can apply to any market. We'll provide you with add-ons if you like to apply them on your platform. We have an option for that included with educational correspondence. That's my private email. You can contact me whenever you'd like. Now, the graphic here says stock strategy because when we first started promoting this years ago, we just were applying it for stocks because that's the way I was taught. But as we progressed and had more and more students who trade different markets, different time frames, we have got tons of testimonials that it works on any market, any time frame, any direction. And myself included, I now only apply for intraday trading. It works tremendously. So don't get fooled by the stock strategy logo there. It really works on all markets and time frames. Now, we're just not going to offer you that. We're going to include a great bonus with this. We're going to offer you 1 year, 1 full year, 12 months of the PTS Primo charting platform free. That's a nearly $1,300 value, okay? Here's what's included in that. All right, obviously, you're getting trading strategy number 4, the way we have the instant access, one-click access to find out the arrows and also to find the buy-sell line, the proprietary buy-sell line. You're getting the top-bottom 25% bar. These are the feature that automatically will tell you all the bars that close in the top or bottom 25% of the range, so you don't have to go searching for that. You get a signal scanner, one-click exit levels. Now, this is something I devised with Pro Trader Strategies. This is just one of our specific ways in which to exit. I share with you that we have upwards of 7 different exit points and exit methods. Here's one of them, and it's automatically available on the platform. Let me show you what I mean here. And here's a great example with the one-click exit levels. A while ago, this was last year, but Facebook was doing very well. It's still doing okay, but it was doing extremely well back in July of last year, okay? Above the 50, and we have a buy signal, strategy number 4, buy signal. Now, with the one-click exit levels, one of our most proper and I would say valid exit levels is the most popular as well. These are the range extensions. So what you would do is simply click on the strategy number 4 tab, and where you see signal arrow, you can also click on range extensions. And automatically you'll see these levels appear on the chart. So you can have a decision as to which exit point you'd like to take. Now, many of our students like to use these in different ways. Okay, these are high probability exit points based on range. Let's say you entered somewhere around here. If you want to get in and out quickly, if you're that type of trader, you could use exit level number 1. A lot of traders like their trades based off risk and reward ratio. Okay, so let's say you traded here and it went up to exit level 1. Rather than getting out there, they would get out at exit level number 2, because that gives a more 2-to-1 risk-reward ratio. And if you got out at exit level number 3, it'd be 3-to-1. Now, still, a lot of these traders like to use this as a way to track their trade. So once you get up to exit level number 1, wherever your stop was, you move it to unchanged where you bought. When you get to exit level 2, you move your stop to exit level number 1. So see, as it goes higher, you're locking in your profit. The only thing we recommend to our students is that once you get to exit level number 4, you should be out of the trade entirely, because it's been our experience that most trades or most trends end around this level. It's not 100% guaranteed. It's not statistically proven, but it's just, a good way to measure that you have a nice profit. You should be out of everything right now before the trend changes, okay? And if we took that trade in Facebook, well, guess what? That was a quick 10.5 points. Now, this is why we tell you we just made it by about 5 or 10 ticks here to exit the trade, because look what happened on the very next day, okay? We had no idea of any news announcement. We weren't privy to this. Facebook, the CEO didn't call me up and say, hey, Steve, tell your students to get out of everything at the 4th exit level, because I'm going to make a bad announcement on the company, and we're going to really drop the stock. No one told us that, but it's in the range extension level. So this is automatically included with the 1 year of the PTS Primo charting platform. Now, we know we have a technical bias. I've shared with you everything that is based off technical analysis. We don't really require that you need to look at the news. But remember, our goal is not to tell you how to trade. Our goal is to teach you things that we have found consistency in. But if you're already trading and you need to look at earnings, you need to look at fundamental news, we're not going to tell you not to use that. So we've even provided you with a way to access that. We're giving you free Bloomberg TV on the platform. We have a media page where all you have to do is click on the icon and you'll get a window of live Bloomberg TV. So any earnings announcement, any news announcement that's coming at that moment, you can be watching while looking at the charts. That's included with personalized tech support, okay? We have tons of testimonials where people love our tech support department. So this is all included free for 1 year. Remember, this is a 1 year, nearly $1,300 value. Now here's the great offer we're going to give to you today. We're not going to charge you for the 1 year. We're actually going to give you the strategy number 4 course with 1 year included with the scanner as well. I didn't cover that, but the scanner and the exit levels for only $695, okay? Altogether, this is actually a $1,900 value for only $695. But this is for the first 20 callers only. All right. After that, we're most likely going up close to $1,900 because this is a great, great offer. Now, $695. I know that's not tremendously expensive, but if you contact Pro Trader Strategies, I'm sure they can even, if you want to, put together some type of payment plan with that. So trust me, we're giving you every excuse here to really take your trading to the next level. A year from today, you will have wished you took this course. So why not jump on board? I'd love to be training you as one of my students, okay? Here's how to take advantage of this. Contact Pro Trader Strategies. I designed the platform with them, and they handle all the course costs and discounts. You can contact them by emailing them. I would probably say the best thing to do is to actually call them directly at area code 310-598-6677. If you want to discuss a payment plan, that's fine, or perhaps you already have the platform. They can put something together with you. They're willing to work with you. Now, that link you see at the very bottom is an informational link. You get a lot more information about what's offered, and you can actually sign up online if you'd like to. They have posted a live link in the chat box because I don't believe that link on your screen is live. So if you see that link on the, just go to the chat box and you'll see the exact same link there. You can click that on and it will take you to a live page, okay? Now, as I stated, I'm going to reserve the last 10 or 15 minutes for any questions you may have had. So if you have any questions, just go to your question and answer box, type them in right now. I'll be happy to answer them. But remember, this is a great offer for the first 20 callers only. So that would be probably roughly about 20% of you in the class right now have this option, but you have to take advantage of this quickly. Once again, what's included when I say students are asking me, I'm looking at the questions right now, when you say mentoring, does this mean private mentoring? Well, The course is online. In other words, we have an online course, but you can always ask me questions via my personal email, and I will answer them as quickly as possible. I answered some emails earlier this morning. I was answering emails almost all day yesterday, and so I will always keep in contact with my students because I want to make sure that you're learning the process. So that's how we say mentoring. Now, we do have some private mentorships, but that's not what we're talking about today. We're talking about an inexpensive way to get in the process with one of our best courses, okay? Strategy number 4. Someone is asking, what are the platforms you can use this on? Well, okay, most of the major platforms, let's say like Thinkorswim, is about the only platform you can't apply it to, but they will allow us to split their data. So if you want, and you still want to toggle back and forth, we will give you a free NinjaTrader platform which you can use and apply all of our methods on. But you know, it kind of makes no sense. Why not just take 1 year of our free platform, which is a lot easier, it's a lot user-friendly, and everything is one-click access away, okay? Let's see, can you tell us the actual, okay, sure, I'll tell you the platforms. They are TradeStation. One of them is TradeStation, another one is Metastock. Thinkorswim, I already gave that one to you. There's MT4. There's also Sierra Charts. And let's see, Metastock, MT4, Sierra Charts. TradeStation. I don't know if I mentioned that, okay? Rob is asking, what day trading time frames have you found reliable for forex and futures? Okay, well, Rob, the basic answer I give to everyone is that the best time frames are the ones that make you feel the most comfortable, okay? Because as I stated, you are in charge of your own trading. I have students that swear that a 10-minute time frame for forex is the best. And I have other students that swear that no, a weekly or a daily time frame are the best. I have other students that say, no, Steve, I like to use tick charts. Those are the best time frames. Or someone would say, well, I've found out because of the long-term advantages, they work much better on monthly charts. Now, is one better than the other? Absolutely not. What is working is you making your own decisions. Because remember, we're giving you the basic format, but it's up to you to decide how you want to apply it. So there's no one way to say it. I mean, I can have tremendous success using tick charts where someone would use the exact same strategy and lose because, and someone would say, well, I don't understand that. If you're getting the same signals, how can you lose? It's really simple because as a trader, you bring all your issues and all your baggage. And where I can maybe take a large loss, maybe someone wouldn't be able to take a large loss and they'd say, I can't sleep at night knowing I've got this drawdown. Or maybe I could, or maybe vice versa. I can't sleep at night, and someone could say, oh, I don't mind that. I can hold on a lot longer. So even with the same signals, you're going to change things, and you're going to change your entries, change your exits, because it's not the same feel for you to make you feel more comfortable. And that's the way you should trade. So if we're, there's no one way for me to tell you that this is the best time frame, okay? I hope that makes sense. Does the scanner have alerts if you're watching more than one instrument, say on a 5-minute chart? No, the scanner doesn't have alerts because the scanner scans for you, but it doesn't really have alerts. What the scanner does is just scan for the setups. We are thinking about possibly having alerts, but in the beginning, while we're teaching you, we don't want you to really focus too much on trading too many things, because that's how you, once again, get out of your realm and start to lose money and start to really have a tough time. So in the beginning, we'd like you to focus on just maybe 1 or 2 markets, 1 or 2 setups, so that you can get yourself going. Okay, that's one of the reasons why we're kind of really not that set on having any type of alerts, because that tends to be used as a crutch where you're following too many things. And remember, as I said, as an educational company, what we want to do is teach you. All right, I know that most traders are used to looking at systems and the bells and whistles where all you have to do is enter a trade or something like that. In my opinion, that's a recipe for disaster. That's how traders lose. We don't want you to ever get to that point. Most traders who do are just simply brainwashed into thinking that's a way to get successful. You have to make your choices. And if you rely on trading too many things, you're really taking yourself out of the game, and you want an indicator or a bell or whistle to tell you that something has been alerted. What we really want you to do is be able to follow these things on your own. Now, what you can do is split the screen. And I've showed this in previous webinars. You can have like 4 different things, and you can have 4 different charts as they're moving, and you can watch them. But we want you to be a part of the process rather than rely on any type of one type of bell to alert you, okay? I hope that makes sense. Remember, we're an educational company. This is what we're focusing on. And we're trying to teach you as opposed to trying to take you out of the game. I know most traders think that that's how you become successful, but actually it's the opposite. The more advanced in the way traders have been taught is really just a way to brainwash you into thinking that you don't have to do anything, but you have to become part of the process. I mean, think of a brain surgeon, not being involved in the operation or asking, someone give me an alert when I have to install that heart valve or something. He has to know what he's doing at all times. And trading is no different, okay? We want you to be a part of the process. I hope that makes sense. I don't want to make too much light of it, but it's extremely important. Good questions. Thank you so much for all these questions. Someone is asking how long this will last. Well, usually our specials last for a couple of days. I know they stated that this is for the first 20 traders, but first 20 calls, I should say. So I would contact Pro Trader Strategies. Remember, there's absolutely no, there's no restrictions with calling them. You can call them, and there's no obligation. You can ask them questions. Once you give them a call, they would be happy to answer any more questions about discounts or anything else, okay? Rob says, one last question here. I have to thank you for having given strategy 3A for free. Very successful with it. I'll combine it with strategy number 4. Okay, great. Thank you, Rob. Another testimonial that wasn't asked for, but once again, strategy 3A is an entirely different strategy, and we've given that away for free on a few. This is just a way to show us our sincerity that we're really trying to teach you. I believe in an older presentation, I gave away strategy 3A for free, and it's a great strategy. And as Rob, is that your name, Rob? Yes, Rob is saying it's been working very well for him. That's great, Rob. I'm glad to see your success. And this is just something we gave away for free. We do that periodically just to show you our sincerity and that we really want to teach you. So I'm glad you're doing well now. But once again, remember, there's no obligation to contact Pro Trader Strategies. They would be happy to work with you to give you some type of payment plan. But please, if you're thinking about it, don't sit on the fence for too long. I showed you a lot of examples that happened within the last couple of weeks. So this is happening all the time. You don't want to miss these good setups. And we'd be happy to work with you. So once again, we're here to educate you. We're here not to just force feed you signals. As you saw, we educated Rob, and now he's doing very well with strategy 3A. And we just want to make you a better trader. So in conclusion, as you take one last look at our disclaimer, I just want to say thank you so much for attending today. I really hope you got something out of this. You saw our attention to detail and how sincere we are in trying to educate you. And I wish you the best of luck in trading. I look forward to all of you becoming students of mine in the strategy number 4 course. Thank you so much. Have a great weekend. I'll see you next time. Bye-bye.